Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And like today, a little kind of a fun topic. So today I want to talk about what are my top 5 tax stories for 2018. These were some of my most viewed videos, and also got a lot of reaction from my community. So we just want to just kind of go over those for the year. All right. So number 1 for me was the Wayfair decision. Now, the Wayfair decision basically overturned the past Quill decision that was talking about sales tax for online retailers. I think when they made the Quill decision way back in the day, nobody expected online shopping to grow to the level that it has. Thank you, Jeff Bezos. All right. And so now what the Wayfair decision has determined is that if, states can decide if you're making, sales in their state, that you have to collect and remit sales tax, because the online shopping, it grew to a point where the brick and mortar retailers were losing money. So if they're losing money, the state's losing tax money. So Wayfair is the Wayfair decision is going to bring more sales tax revenue to the states, and it really put added a wrinkle to smaller mom and pop type sellers online because of having to comply, right? States are still writing the language to determine how e-commerce sellers are supposed to respond. This leads to services like TaxJar. TaxJar has been around for many years helping e-commerce sellers, as well as Avalara is another sales tax service that I know of. So those are 2. I'm sure there will be more popping up because this has become such a big deal. But those are the 2 oldest and best that I know. So if you're an online retailer, you definitely need to pay attention to this, because there are states that actually tax digital products, okay, not just physical products but also digital products as well. I forgot how many states there are, but they do. So you have to know this stuff, and this is why it pays to have a service like TaxJar or Avalara, because that's what they do. Instead of you trying to know how to comply with all of the 50 states, pay somebody that does their job. Okay, that's what it's about. So with the Wayfair decision, states are still formulating the language and all of that stuff, and filing requirements and all of that for sales tax. I mean, and don't get me wrong, states already have rules for filing sales tax. It's just with the online and e-commerce, they're going to have to tweak some stuff. So that's number 1, the Wayfair decision on sales tax. Number 2 for me was Wesley Snipes. Okay. The reason Wesley Snipes was a top story for 2018 is that this has been a long-standing, long-running tax fight between Wesley Snipes and the IRS. If you remember, back in 2013, he was sentenced to prison for 3 years for 3 counts of failure to file. And the issue with Wesley is that he was caught up with some CPAs that he says that he did not know were tax protesters. Tax protesters are people that believe that, that the income you earn aren't wages, some stuff, okay? You know a tax protester because they'll start out asking you, show me the law that says income tax is legal, all that stuff, okay? So Wesley was, basically a victim of these types of folks, and they had him believing that he did not owe income tax on all the money that he earned making his movies. Okay, so he wound up going to jail for failure to file, but those CPAs he was involved with, they wound up going to jail too, and for longer than him, okay? But then after he got out of prison, he was still fighting what the IRS said that he owed. And here's the thing about, dealing with the IRS and people going to jail for tax evasion, failure to file, whatever. The tax bill is still waiting for you when you get out. Going to jail does not erase the tax bill. So when he got out, his tax bill was still waiting for him. And so he was saying, okay, well, they say I owe this much. He tried to submit an offer in compromise. Well, you say I owe this much. This is how much I can afford to pay. Well, the IRS came back and said, okay, well, this is what you say, but this is what we found that you can pay. Okay. So just because you submit an offer in compromise to the IRS doesn't mean that they're going to accept it. All right. So this is why, and I think that's one of the things that the Wesley Snipes decision brought out, is that just because you submit an offer in compromise and you say what you can pay, that doesn't mean that the IRS isn't doing their homework and going back and saying, no, based on what we found that you have, in his case, you've got holdings in this type of company, you've got this coming up and that coming up, therefore you owe us this much money. So he submitted an offer in compromise of like $800,000, and the IRS said, no, you owe us a couple mil. Okay. So that is, that's why the Wesley Snipes story was such a big deal, because I think it really brought out that, the offer in compromise process, and knowing that, and the Supreme Court ruled that, hey, no, just, not the Supreme Court, but the tax court ruled that, hey, just because you submit an offer in compromise to the IRS doesn't mean that they have to accept it, and, blew his whole thing out the water. So that was my number 2, Wesley Snipes. Number 3, tax reform itself. Okay. Tax reform is a big story, because guess what? A lot of those, a lot of the provisions in the Tax Cuts and Jobs Act started January 1, 2018. And so now we are to the point where we're going to be finding out exactly how this whole tax reform is going to impact people. Now people, the states, with the limitations in, in itemized deductions, the state and local tax deductions, the states were trying, in the high, property tax states, right? Like in the New England area, the California area, these high property tax states were like, hold on, we need to find some sort of workaround, because this is going to kill our residents, right? So the states were trying to find this workaround, develop these charitable organizations to say, if you contribute X amount to this charitable organization, then you'll receive X amount of credit for your property taxes, therefore trying to circumvent that $10,000 limitation. And the IRS said, no. We're not accepting that. And that's the thing that you have to realize, is that just because the states say that you can do it, when it comes down to the federal government determines how they will classify all that stuff. And so the Fed said, okay, if you donate, let's say $15,000 to this charitable organization and you get $10,000 in, property tax credit, then you can only deduct $5,000 as a charitable donation. Okay. The federal government was not even trying to hear that. Okay. For real. So with tax reform, it saw a huge drop in the corporate tax rate down to 21%. It doubled the standard deduction, almost doubled the standard deduction all around. But, with that came the removal of personal exemptions. And again, the limitations on state and local tax deductions, and also the removal of tax deductions that were subject to the 2% floor. And those tax deductions were employees being able to write off a home office. Employees on a W-2 that worked from home were no longer able to write off those home office expenses. We're talking about, union dues and, all of those things that were, even tax prep fees for people that don't have a business. You can't write those things off anymore that you used to. So all of those deductions that were subject to the 2% floor are gone, right? So that's why tax reform has been such a big story, because it's going to impact everybody, either positively or negatively. The other thing about tax reform that was a selling point that really wasn't, is how everybody was expecting this windfall of money. Now we're going to find out on the tax refund side during this filing season exactly how that's going to impact people. But the main selling point of the decreased tax rate for corporations is that, oh, this will give corporations more money. They're going to hire more workers. They're going to increase wages, and these jobs are going to stay here in the United States. And none of that happened. And there was a conference in Dallas, Texas, where folks like AT&T and Coca-Cola were there, and these CEOs flat out said, no, we're not hiring more workers. We're investing in, improving the business and automation. Well, increased automations equals what? Fewer human beings, okay? So wages have not increased at all, and when I say at all, I mean nationwide. There will be some places that did see an increase, right? But you had to pay with it with something else. There are people that gave out these bonuses in December and then turned around and laid people off in January. Okay. So yep, you paid for the bonuses with people that you laid off. So it didn't work out for everybody. It worked out for you if you got the bonus, but if you got laid off, it didn't work out for you, right? So that's what, with tax reform, it's going to impact people on all different levels, whether positively or negatively is going to remain to be seen. But by and large, that whole trickle down thing that folks are talking about, that ain't happening. The other big thing that happened in tax reform that's not well known on the streets is qualified opportunity zones. And with qualified opportunity zones, these are areas where each state submits like a tract of land, and people who have capital gains can invest their capital gains in these qualified opportunity zone funds and not pay tax on the capital gain. And if you leave your money in this qualified opportunity zone long enough, which I want to say it's up to 10 years, but don't quote me on that part. However, what I do know for sure is that your gains will also be tax-free. So we're talking about, blighted neighborhoods that are going to be revitalized. Okay. And so, it's going to be revitalized tax-free to those who invest. Boom, shakalaka. Okay. So, and then for home business owners in the tax reform is this section 199A or qualified business income deduction. Now listen to me, there's a whole bunch of math that goes into this section 199A deduction as to what you're supposed to get, but understand it's up to 20%. It's not saying that you will get a 20% deduction for your profits. It's up to. It's going to depend on what your adjusted gross income is. There are so many moving parts to section 199A. I'm not even going to sit here and tell you all the math that has to be done to come up with that. But just know that you got to know more about your business. You got to know like what assets your business has. If you bought a laptop, if you bought a phone, if you bought a printer or whatever, all of that gets factored into your section 199A deduction. So that is why tax reform, again, is a huge story for 2018. And I think once we get the results of the filing, it's going to be a huge story again. The other thing with that, just the last thing on tax reform, is that now we have a new Congress in. We don't know if they're going to go and renew some of those extenders. We'll just have to see. There's some scuttlebutt that says, there are some things that are put out there, but we really won't know unless it actually happens. And if they do it in January like they did last year, that's just going to be a whole lot of fun for people that had already filed. Okay. That was number 4. Number 5 is the Paul Manafort and Michael Cohen convictions. Okay. The reason that this is such a big story is not necessarily the political nature, which that in and of itself makes it a huge story, but also because it brought out and made known to the public that a criminal case can turn into a tax case in the blink of an eye. So while they're investigating all this other criminal stuff, Paul Manafort wound up being convicted on 5 counts of tax fraud, 2 counts of bank fraud, and 1 count of failure to disclose a foreign bank account, okay? Because you can find the math. You either filed or you didn't. You either reported or you didn't, okay? There is no convincing of anyone. The paper is either there or it's not. And then for Michael Cohen, who subsequently got disbarred from New York for his felony stuff. He was found guilty on 5 counts of tax evasion among some other stuff. And I think he failed to report about $4 million in taxes. So these gentlemen, are going to go to jail. And whatever the finance is that's waiting for them, if whatever they have to pay back, it's going to be waiting for them when they get out. But like I said, it brought out and it showed the world that just because a case starts out as criminal, it can turn into a financial crimes investigation in the blink of an eye. Okay, so those are my top 5 tax stories for 2018, you guys. And, it's worth paying attention to. And, and especially when it comes down to tax reform, you really got to be paying attention to how this is impacting your life so that you can make some better decisions going forward. The other thing that happened with tax reform was the new tax forms. I think I might have skipped one, you guys, but the new tax forms. So with 2018, we got the new filing forms, but we also got the new W-4. Now, the thing with the W-4, and I did forget to talk about this, so sorry, but I got to get it in. Okay, so the thing with the new W-4, when this happened previously, when there's changes, everybody refilled out their W-4, sent it to their HR, and everything was great. But with this one, the government just made the adjustment for you. So if you did not go back to review your W-4 to make sure all of your withholdings are correct, then there's a good percentage of the population that will have under withholding and could result in an under withholding penalty. So these new forms, a lot of people didn't go and do the math themselves. They just said, okay, it's just going to be what it's going to be, and might have gotten some more money home in their paycheck. Well, that more money that you got home in your paycheck might be your tax refund. Okay? Just letting you know. All right. So now that's it. Okay, so guys, thank you so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right, have a great day, and I'll see you next time. Bye.